Major support for these programs is provided by Bank of America Merrill Lynch and Perfect Building Maintenance, New York Community Bank, Kilroy Architectural Windows, New York's Window Company, Greenberg Traurig, LLP, M&T Bank, Chase Commercial Term Lending, Chelsea Lighting. Additional support is provided by Briarwood Organization, Bruce Mosler, Capital One Bank, Cassidy Turley, C.B. Richard Ellis, Cushman & Wakefield, Dime Savings Bank of Williamsburg, Douglaston Development, DDG Partners, Hal Fettner, Durst Fettner Residential, Friedman LLP, Accountants and Advisors, Flushing Bank, Gemini Real Estate Advisors LLC, Genova Burns, Giantomasi and Webster, Investors Bank, James D. Kuhn Real Estate Center at Syracuse University, James Orphanides, Centurion Holdings, Corman Communities, Madison Realty Capital, Margolin, Weiner and Evans, LLP, Certified Public Accountants and Business Advisors, Massey Knackle Realty Services, Meridian Capital Group, Newmark Knight Frank, Sterling and Sterling, SJP Properties, Stonehenge Partners, the Wickoff Group, Urban American, and Ackman Ziff Real Estate, Aerial Property Advisors, Eastern Consolidated, Essex Capital Partners, Goldman Properties, Moynihan Group, Muss Development, RAL Development Services, the Spandrel Group, LLC, Rosewood Realty Group, Terra CRG, Triangle Equities.
The hospitality industry is on fire. People are coming to New York, people are coming to the USA, and where are they staying? They're staying at some of the best places. So I've assembled 4 individuals, 3 hotel operators, and 1 man who has the money over here to provide their insight on the state of the hospitality. My guests today include Larry Corman, who is the co-CEO of Corman Communities and the president of AKA. Ian Reisner, who is the principal at the Out NYC, Rafi Fishback, who is the principal at Mesa West Capital, and last but definitely not least, Naveen Kakara, who is the president and CEO of HHM. So you have over 100 hotels today, right? Pretty close to 100 hotels.
In a week, we'll just cross the 100 mark.
How is 2012? How's this year been?
North of 5% growth. I think we will exceed what the industry is generally predicting for the year. It has been a tense year, I have to tell you, because when you look by market and you look at the top 20 EBITDA producers within the portfolio, it is a lot more lumpy than in prior years. We've seen very short booking windows. I think what we benefit from is our exposure to group and true European international is less than most others. And we're in gateway markets that are still allowing us to grow.
That's an interesting thing. Larry, you have a unique thing because as opposed to your hotels where it's maybe a 2-night stay, or maybe sometimes 3-night stay, you're at least a 2-week, 3-week, 4-week, maybe even longer. How are you seeing the market?
The market's been very strong, and we're a blend of both hotel and apartments, and both markets in New York City are very, very strong. So it's been a good year for us. The market's strong enough for us to take a step back, go back to our true roots of a longer length stay. So the sweet spot for our stays are about 2 weeks to 2 months.
Yeah, but here, what I heard from Naveen, which is interesting, is that even though last year we had 50.5, close to 51 million visitors over here, you're saying that we've had less visitors from Europe, foreign visitors, and also less group business.
We track both numbers pretty carefully. What we learned just in going through the last 2 quarters specifically is that we have about 18% exposure to international. If you break out the 18% and you look at Europe versus all other, and by that I'm including Brazil and China, Canada obviously, it is low single digits for European exposure in our hotels. We happen to not have large group houses or meeting houses. I think we still have a good number of meetings in New York, certainly not at the pace that the full service operators would like, but meetings are happening. I think they tend to be a little bit more finicky. I think they have even shorter booking windows.
Now you are the new kid on the block. You opened up, I believe it was March 1st was the official date open.
April 1st is the real opening date.
Okay, but April 1st, and you know, the Out NYC is New York and one of the nation's few, gay and lesbian friendly hotels over here.
Straight friendly.
Straight friendly. Who's coming to your hotel? Where are they coming from? And what's the length of stay? Give us a little idea.
You know, when I look
Because you are a character, both as a hoteler and as a friend.
I learned from you the best of all the characters.
Right.
When we took over this property 4 years ago, I had an opportunity to develop a boutique hotel or a new twist, which is a straight-friendly boutique hotel. And first we'll deal with sexual preference. 2/3 of our guests are gay, but 1/3 consistently since the first month are straights that knowledgeably book here because this is a gay-oriented hotel, and they're told at the front desk, you know you're booking in a gay-oriented hotel, and they specifically state that's the reason why they chose it for the lifestyle and to see what this is all about. From where our customers come from are almost 50% non-U.S., which is surprising. I didn't expect that many. And of those non-U.S., 2/3 are European. So we're getting a very, very big European clientele, partly because Europeans are much more open about their sexuality. In places like China and Korea and Russia, open sexuality is not very comfortable, but European nations have been very comfortable with sexuality.
Larry, do you have a lot of European visitors?
I'd say our two biggest market segments are the production companies in New York City and international traveler. And unlike Americans who vacation for 5, 6, 7 days, generally people from Brazil, Australia, they'll come, they want to live like a local, they want a residence, they want a pied-à-terre on demand. So we've seen that market still be very strong.
Money Man, what do you guys like financing? I know you're doing hotel financing around the country. What type of deals are you seeing, and what's coming to you these days?
Well, it's interesting because even in the last 6 months, I'd say there's been a big shift, and I'd say that capital is, from the lending side, particularly the first mortgage side, is back for hospitality. For us, we focused more on kind of the transitional assets, deals where there's a story involved. Somebody might be reflagging a hotel, repositioning a hotel. So the type of deal that's not ripe for kind of your traditional senior lending. But I've got to say it's been an interesting kind of twist, and in some cases, kind of enlightening, the fact that for hospitality deals, capital is back in the senior debt market, and I think that what that shows is, as you look at the other asset classes, folks are starting to chase yield. Cap rates are really compressing. The margin that you can make loans on multifamily, retail, office has shrunk so much that now folks are gravitating more towards hospitality because they can get a little bit of a yield premium. So
I think that I had dinner last night with a regional bank, New Jersey based, who's doing financing. He said they did their first deal in Massachusetts. They're doing Pennsylvania. And I mean, they're a $14-15 billion bank. And he said, look, I'm getting a 3% rate on my multifamily. I said, what about construction? He says, we've got hurt. There's a risk reward. Hospitality has always been a typical asset because of the, especially in your hotels, every day is a new customer over there. Your hotels, it's every 2 weeks or a different case. Now, I know you've financed. How are you seeing the financing world?
My brother oversees all that, but as you said, all around 3%, locked in for 5 years. And we're also seeing a lot of our partners doing new construction in hotel, which you didn't see before. So the last 2 years, you're seeing a lot of action in the new construction.
Now, with regard to that, I know Naveem has, a couple of hotels opening in this market, and you recently had Princeton Ewing over there, Hyatt 48, then you're going to have the one over there in Union Square. what have you opened? You went to Los Angeles, right?
We've gone national and international this year. We're opening up in 2 months in Beverly Hills, right on Wilshire and Crescent, a beautiful 88 suite hotel, 1 and 2 bedrooms. Eventually we'll have an A kitchen there as well. And in London, my father found a location in the West End that's spectacular, and we're looking to open a few small pods of smaller suite residences in London and take the brand more international.
So what do you see, and I think it's interesting, and I know I'm not going to forget about my friend Ian over there. Do you see a shift in the type of size of rooms or the types of things? Because I hear Larry talking
Technology.
Going to 1 and 2 bedroom suites, which is a larger situation. Ian, when he took the out NYC, basically he had to live with a configured space that was originally built for the World's Fair. People want larger rooms. Well, what are you seeing over there? What's the request in size?
You know, people would always take a larger room if you gave it to them.
Price, but it's also the price.
But I would tell you that price per pound, where people are more flexible, certainly when they're coming for a 1 to 3 night stay, is they're much more flexible in terms of having an armoire versus a closet. They're much more flexible about the size of their bathroom because they know that New York is expensive. And as a percentage of their overall spend on vacation, I'll tell you that, you know, if you're comparing a much larger room at $600, but you can get a room that is beautifully located for $200 or in that price point, I think that suits the taste and preference of travelers and certainly of this economy.
Now, here's interesting, and very interesting, because my 1010 Wins report this week, and one of my articles, which is going to come out, and I know all of you read my articles, is talking about the implementation of bunk beds in facilities. Now, it really works out well, because in my research, I found that one of the hotels that you're managing in Brooklyn happens to have bunk beds. In the new hotel, the NU Hotel in downtown Brooklyn. You have bunk beds in your hotel. And I think I noticed recently on an internet site that you have a summer special on bunk beds, which relates rather well to what you're saying before. People are looking to save money.
Yeah, I think people are looking to save money, but what is surprising is that we get a premium for our bunk bedded rooms. And so if you look at New Hotel, Smith and Atlantic, good location within Brooklyn, what we're finding is that that room sells out well before our standard room. And we're not selling it for price. We're selling it because you have families that may not want 2 rooms. And what suits them well is to have a different kind of an experience where, you know, you could have a full or a queen or a king size bed with a twin bunk on top of it. We just bought an independent in the North End in Boston called the Bullfinch, and we're looking at the same thing there again. And you know, you live and learn. We introduced a handful of bunk bedded rooms, had no idea there would be that kind of demand, and we're thinking of adding more in Brooklyn.
Yeah. For our customer, they're coming for the lifestyle. They're coming for our programming, our entertainment, our culture and sense of community, and being part of what the Out NYC. So it's not even the size of the room. They're content with basically something the size of a full-size bed with a privacy curtain and their own little flat screen television, and that's what we call our sleep share program, and that's working quite well for us.
But you bring up an interesting thing of the lifestyle, because Larry, you know, you have the AKA kitchen.
We're all about bigger is better.
No.
For a longer length stay.
No, I'm not. I'm talking. I know about that on the room, but I'm talking about the additional amenities. Is what I'm bringing up. The kitchen and the AKA kitchen and what you've done in Philadelphia, you know, at the other hotels. But people are coming to your places for a couple of reasons. Besides the extended stay, they're having. I mean, you have that special lounge, which is.
We found that whether you have a 250 square foot hotel room or an 850 square foot suite, if you're there for 2 weeks, 4 weeks, 6 weeks, you still are on your own in that suite. So it is nice to have a communal experience with others in a similar situation. So we do have a private fitness center, an A cafe for breakfast, an A lounge for a drink with other residents. It's never crowded, but the kitchen's an important ingredient for somebody staying longer. They can feel like a local. They can go shop, come back, cook. They don't have to go out for every meal. They can have a bowl of cereal in the middle of the night. They want to watch a movie and have popcorn and tea. They can put it in their kitchen and not wait for room service.
Now, the other interesting situation, which I believe you are doing at the Hyatt 48, is you have the second floor or something like a business lounge or something over there Are you trying to do that for more places?
We're looking at another one in Miami where we're building a tower on the waterfront. And it's a 93-room all-suite hotel. And with 93 rooms, you often don't have the footprint in order to do a wide program on the ground floor. So again, on the second floor, we're looking at doing sort of a combination of a self-service, VIP, high-end bar with library, if you think of it that way.
Similar to what you have at your hotel?
Yes. Yeah. And the second floor is nice. You have a beautiful view from the second floor, whether you're in the city or on the beach.
Well, and I think what people value at that price point is having a bit of an escape. And so it's a place where you go discover it as opposed to being told about it. And it's okay to sit there for a couple of hours. And it doesn't feel like it has the bustle of a Starbucks. It's still yours. You own the chair, and you're there with like-minded people.
Now, when you're looking at financing, I mean, do you like the boutique, or do you like the specialty, or you want, as one would say, the meat and potato, you know, Hilton Garden Inn, you know, Holiday Inn Express? What is Mesa West like?
Well, I think, you know, for like just having been a lender for a long time, you know,
I wish I could say that. If you're saying it's a long time, I must be a very long time.
I think our view is we're generally looking more at the branded properties that have the deep reservation systems. I think from a lender standpoint, we only take on downside, right? You know, there's really no upside to us other than getting our interest payment and our principal back. We like the comfort and the safety of the reservation system. So I think, you know, from that standpoint, you know, we generally are looking more at the branded properties. Now, when it comes down to specific locations, you know, we have taken, you know, a look at kind of more boutique or independent properties. So I think it really, you know, for us, if it's anywhere kind of outside of, you know, New York City, DC, Miami, we're probably going to stay branded. But, you know, in locations such as here, we'll take the view of underwriting an independent or boutique property. I think generally they're more, you know, in the banking community. I think it's easier. There's more recognition. It's just been easier to finance the stuff.
So here's the question, because we are a New York City show, even though people from around the world watch us. Do you believe New York City can take another 30 hotels or 40 hotels?
Absolutely. It's the greatest city on planet Earth.
I'm concerned, Michael. I canvassed all the brokers I know in the business, must be about 10 people, and I'm up to about 25,000 hotel rooms coming online the next 48 months. That's a big increase. That's a 30% increase in inventory. I'm a little worried. I don't see 50 million going to 65 million in 4 years.
I would tell you that history as a guide tells us that we can absorb the rooms, and looking at
look at the number of 90%
occupancy across the last probably 10 quarters gives me confidence, and the pace of supply has actually decelerated. If you look across the country and you talk about how you have 50 basis points of supply, it is scary when you realize that a good chunk of that is in New York City. On the other hand, if you look at what we've absorbed as a community across the last 2 years, we have fewer hotel rooms coming online on a relative basis.
Now, here's an interesting question. Manhattan, everybody loves Manhattan. There has been a lot of hype and done very well. And I did a show in Brooklyn a couple weeks ago, and I had Jed Wilentis, who is the White Hotel, and he had just opened up a couple of months before, and he said 75%. And you've seen even in downtown Brooklyn for yourself, which is a shock to me, but you're in a different thing, because the other hotels in downtown Brooklyn are even doing well. Do you think the boroughs, the other boroughs, are really, you know, when business is at, like you say, a 90% occupancy, people will go to Queens, you know, but how many people want to say, I'm going to Long Island City? I mean, you really don't have that, fortunately. Would you venture out to the outer boroughs? I want that question for all of you.
We would not.
We haven't been yet to Jersey City, as an example. We're very interested in the market. We've studied it. There's some people doing very well. We've looked at markets like Harrison, where people are doing very well, and we haven't gone yet either.
What about Queens?
Looked at a lot of projects on Flushing, looked at branded properties where I thought that, there's this interesting migration of the Chinese community, and they have such unbelievable pent-up demand for the right hotels. We just didn't know if we were the right investors, but we spent time looking.
I was in Flushing with probably one of the leading developers in Flushing who is building a Hilton Garden Inn.
That's right.
And the guy who runs the company is formerly from the hospitality industry. And he said, there is such a pent-up demand in Flushing, as opposed to anywhere else, because of the number of Asians and the different dialects coming into the Flushing community. But you have to, if you go to Flushing, you have to have the thing. Woo! You have to literally make the right location. I mean, location in Flushing, and the size and the rooms are a very different.
What you may not know is, as a kid, I lived at Main Street and Union Turnpike, which isn't far from the middle of Main Street where all that growth is happening. It's a whole different world, but at the same time, if you look at it from an investment perspective, I would tell you that if you're comparing it to Manhattan or even Brooklyn, the first thing I notice is you don't have the diversity of demand generators. And that diversity of demand generators is what gets you through different cycles. And so you are counting on strong but fewer types of travelers and demand to fill the hotel rooms.
Now, but I could see an AKA, because of the business that you do with regard to the movie production business, because of Steiner Studios.
We do a lot with Steiner.
And, my friends at Silver Cup, that there is a demand. Now, people want to come to the city. I mean, I said this when I did a Queen show. How many people are going to say, I want to live in South Ozone Park? When they were talking about making a convention center near Aqueduct Racetrack.
Right.
That's not the market. But what's happening in Brooklyn today, there is that possibility. I mean, do you see a need? I'll give you better. Do you see a need for another out NYC, out number 2? Like your friend Richard Bourne did. Richard Bourne did with Pod 2. Do you see that?
I got a call from someone that owns land in Williamsburg and said, "Do you realize we have 2 or 3 gay bars and a huge, vibrant 20-something-year-old gay community in Williamsburg? Would you like to open the Out Williamsburg?" And my answer was no, not right now. And if I open a second location, it wouldn't be there. But no, I don't think I would open there, because I feel like it's too much like every other market in the country where there's endless supply. It doesn't matter what you produce in Brooklyn, there will be another parking lot or another factory turned into something pretty for 50 years. There's no supply constraint. Manhattan is supply constraint. So if I open another out, it would be in New York, but that's not my plan.
And what about you with regard to financing in the boroughs?
I think for us, candidly, I'm not smart enough. I think, as everyone's alluding to, it seems as you go out into the boroughs, you need to understand kind of the cultural pockets and the communities to really get your arms around the demand generators, and that is something that candidly I don't understand well. And I think for us, as a lender, having my lending hat on, I say there's still a lot of volatility in the boroughs, so it's probably at this point still a better equity play, meaning. The folks who are investing their dollars, if it hits, it's going to hit big and they're going to make a lot of money. As a lender, there's still a lot of downside, right? So for us, I think, just given the volatility, it would kind of cause us to stay away. As the different, boroughs continue to develop, I think that probably changes over time.
Now, your roots are in Philadelphia. Your roots are in Philadelphia. How is the market in the Philadelphia market, the Princeton market, and that market today?
Nationally, every market is strong right now. The second and third quarter look great. Philadelphia never has the high highs. They don't have the low lows. Right now, it's just very, very strong in New York, but Philadelphia is very strong as well.
And how do you see?
Philadelphia, for us, has just been on fire. We have a new convention center which doubled in size. And so we're actually undersupplied in the short term. And so where we have the citywide conventions, you could feel that compression all the way to Cherry Hill and King of Prussia. That's how much demand there is at the peaks. On the other hand, I would tell you that New Jersey has gotten hit more than some of the other markets that we're in.
That was my next question. I was going to question the New Jersey, and especially certain markets like the Princeton corridor, the East Brunswick corridor, the Route 17 corridor. And I know, in the Corman community business.
We have another division, and we have Somerset, Clifton, and Union, 3 properties in our Ave portfolio there that are doing the best they've ever done. They're at their highest levels right now.
but the Ave is like a 6-month resident.
It's a blend of about 125 apartments and 125 monthly suites. But the monthly component, which translates a little towards the hotel industry, has been very strong, the highest level ever in terms of rate and occupancy.
And
It is spotty that way. You know, like Bergen County, we're doing well. We have something in Bridgewater, we're doing well. Extended stay in Ewing has been doing very well. At the same time, when we're looking at you know, Woodbridge and some of these other markets, you know, there's certain pockets within New Jersey that I think got more impacted because their local businesses and office buildings got hit a little bit more than others.
now here's an interesting thing. The Super Bowl is coming to New Jersey, and you know, it's like the Olympics right now in London. You have this situation. It's a 2-week. Super Bowl will be a week and a half, and the rates will be crazy. How do you see that having an effect on your business? Should be great.
Should be terrific. You know, we've had the Super Bowl in other markets that we're in, and it's terrifying the year after because you're looking at your comps and you're trying to figure out how you'd ever do that again. But it's a real challenge to figure out how long to hold out in terms of pricing the business at the right. You know,
We always have about 20 to 30 of the Giants staying with us, so we were one of the few Philly fans that were rooting for the Giants to stay on. There's already people who are in charge of planning the Super Bowl that have been staying with us. We have a property about 3 miles from the stadium, so they've already started the process of planning for that. So I think it'll be a boon to the entire area.
Well, how do you, you know, you said you grew up in Queens. You grew up in Long Island, I believe. How do you see the Long Island market for any of you? I mean, it's not for you because it's not really a business model. It doesn't have the business customers. What about you and you?
So I think it's, you know, we continue to look in Long Island for opportunities, but I do think it's tough, and you need to understand the local dynamics. I think, you know, a lot of the companies that had kind of big back office presence there, as Nassau counties continue to get more expensive, continue to move further east, which kind of causes a challenge in the market. So I think, you know,
I mean, it's very interesting, you know, because what happened is there was the hotel built in Long Beach, which went into bankruptcy, you know, Chapter 11, and the only way that they're really going to survive now is that the debt has been restructured from 35 million to 22 million or something like that. And then the Garden City Hotel recently has traded hands, and when it was supposed to be sold for 85 million, it's trading for like half of that. But there is a need. I'm not sure there's. I don't think, you know. We were talking. How about Fire Island?
For me, I look at Long Island as a beach community. Many beach communities. I actually looked at the Long Island, Long Beach deal. I'm looking to open an outlet somewhere on Long Island, whether it's Fire Island, outlet, kind of a cute name. So a beach community. I like the beach communities in Long Island.
How do you see the next 6 months in the hospitality, Larry?
Very strong, very, very strong.
I think it's going to be terrific. The first 2 quarters of this year have held on better than I would have expected, and I think a lot of people are going to hit high single digits relative to what they would have expected a year ago.
So I think, you know, in a general thing, scenario is the world is looking better in hospitality. You can't get your spreads that you could get because there's too much money out there, but the world is over there. People like the variety of options of, you know, your type of new hotel that you have, and the extended stay. And I think generally, you know, we're talking about a good environment in 2012, and I'd like to thank all of you for being here. Larry, Ian, Rafi, and Naveen. See you next week.
Thank you.
Yeah.